What's going on, Trading with Jesus family, man? I want to give a big shout out to you guys, each and every single one of you guys, for showing me all the love and encouragement in the previous video I just dropped on the channel. I was not expecting that video to do as big or go as big as it did. I literally just turned my camera on and just expressed myself. You know what I'm saying? So it's truly a blessing from God that a lot of people are on the same journey as me. And wow, like I'm just lost for words. Like you guys don't even understand, man. Like it's truly a blessing to just see my community just, growing right but before my eyes, you know what I'm saying? And I couldn't do any of this without my Lord and Savior Jesus Christ, man. So I just want to give you guys a shout out. Shout out to you guys. I hope, I can be a source of light on your trading journey. And I just hope, what I'm saying, we can just go big from here, you know what I'm saying? And I just want to give you guys a huge thank you, man. Like I couldn't do any of this, you know what I'm saying, without my savior and also you guys, you know what I'm saying? So shout out to you guys, man. And if you guys have been keeping up with the series that I've been doing here on the channel, I've just been basically breaking down my strategy to you guys. And I've turned it into like a mini series. So you guys can find it in the playlist on the channel. So if you guys have been keeping up with the previous recordings, please do not start from this video. Make sure to start from the very first video and then make your way up until you get to this one, right? So in the last video, I was basically speaking about external and internal structure. Today, I'm going to be speaking about the difference between a reversal and a correction. So if you guys know my strategy, right, we've already established that the market moves in phases, correct? So the market moves in impulse, correction, continuation. And for those of you guys that have heard of that or don't know what it is, it's basically market structure, right? It's all just simple market structure. So I've kind of gave you guys like a little blueprint right here on my chart. So basically, this would be an uptrend market, right? You see price continuing to get higher, and we're also creating higher lows, right? So higher highs and higher lows for a bullish market, lower highs and lower lows for a bearish market. So in a bullish market, right, price is never going to just go straight up, right? In a bullish market, price is never just going to go straight up. There's always going to be pushes up, pushes down, pushes up, pushes down, and it's just going to continue, right? So that's basically what I've shown here. So basically, price is always going to reset and correct itself. This is very key. This is how you know price is correcting, right? So let's say you establish the type of market you're in, right? You see that the market is giving you higher highs and higher lows. Cool. You notice that, okay, you notice that, okay, this is a bullish market, right? So then every time price creates that higher low, you know that it's just a correction. You shouldn't be looking for sells in a bullish market. The only way you should be looking for a sell in a bullish market is when, right, price is giving you higher highs, higher lows, and then we break the previous higher low, all right? So this is the difference between a correction. So a correction is always going to give you a continuation, right? If the correction doesn't give you a continuation, and this is very key, if you don't get a continuation after the correction, then more than likely that specific market is about to reverse and go in the other direction. So here, for example, price gave us the correction, made a new high. And what did we do? Right? People would have been like, okay, price is correcting, But like I said, if it doesn't give you a continuation afterwards, then it's going in the other direction. So in this scenario, right, my made up scenario, price actually came down, took out this higher low, and now, right, in this type of scenario, we would now start to trend down, right? Because we took out this higher low right here. And then in, in a downtrend scenario, right, you see price getting lower, lower highs, lower lows, and you would know that price doesn't want to go any lower because why? We took out the previous lower high. So now price is going to start what? Trending up. So that's pretty much the difference between a correction and a reversal. All right. I hope this makes sense to you guys, right? So if price doesn't give you the impulsive move after the correction is finished, then more than likely it's going in the other direction. So if you have to write that down, if you have to put that in your notes or take a screenshot of this right here, by all means, right? This is foundational market information right here. Like this is something that you have to know, right? So yeah, and this goes back to my previous video that I just recorded on external and internal structure. So if I give you guys some real chart example, right? So for example, right? Let's say you were on Euro NZD. And you're like, okay, I see price getting higher and higher and higher, right? So clearly, like I said, right? So in this case scenario, price gave you an impulse, correction, then it created a new high, gave you another impulse, gave you another it corrected, then it gave you another impulse. Well, I consider this the impulse, but this can be considered an impulse as well. Let me actually pull out my fib real quick. So impulse. So the reason why I consider this the impulse or the swing high is because, like I said, if you haven't seen my Fibonacci video, please check that video out. So every time price hits the negative 27, we correct, right? So that's my theory. So that's why I marked out this high instead of this one. So basically, price corrected, then it gave us a new high, then it corrected, then it gave us a new high, then it corrected, give us a new high, corrected. And notice every time that it's correcting, right, we never take out any higher lows, right? The lows are just getting higher and higher, right? That's why it's called a higher low. So this high is higher than this low. This high is higher than this low. And it just continues, right? So if we pay attention to here, right? So price gave us that impulse, correction. Notice it never took out this low. So then price gave us another impulse right here, because this is the highest price went. It wouldn't be here because price actually got up here and then it left this wick. So it gave us that impulse. All right. And this is basically still the low, right? This is all of this would be, so all of this move right here, all right? All of that would be considered the whole entire impulse, right? In my opinion, some of you guys may disagree, but yeah, I would consider this it looks more sharper here. Not gonna lie, it looks kind of backwards like that, but this was honestly the highest price went, so that's why I marked it out there. But if you want to say impulse, correction, same thing. I just marked out here because I just marked out this one because this is the highest point price went. So that's besides the point. So if we look at this higher low, right? This is the recent higher low. So what did price do? Price couldn't give us, since this was the previous higher low, right? So basically what I thought was, okay, this is our new high. Then price gave us the impulse, right? So actually, yeah, I'm gonna make this my high. And then maybe I'll just clone this because both of these highs are equally important. So basically what happened here was price gave us that impulse correction, then it went up, and then we failed to make any further highs. And then what did we do? We took out this recent higher low, right? So we took out the recent higher low. So this would be considered a reversal. Again, it would be considered a reversal because we took out the previous higher low, right? So now, as you can see, price took out the higher low, went down, gave us a lower high. Then what did we do? We made a new low. And we can test out my fibs also. So remember my theory of every time price hits the negative 27, what do? We correct. So basically, so we got A, B, C, and then we got D at the negative 27. And then what did? We corrected. So basically now what I'm waiting on Euro NZD to do is for sellers to come in at this level. You guys see, remember, every time price is correcting, you want to wait for price to give you a noticeable wick in a fair value gap before getting into the trade. So as you can see, price gave us a low, then we're in the continuation phase right now, right? And then we tapped into this fair value gap. And if we go down to my 5-minute chart, we see that we have a market structure shift. So in this case scenario, all I'm waiting for now is a break of structure. Break of structure, enter the trade, and set and forget. So back to the video, right? So that's basically how you're able to spot corrections versus reversals. If let's say this correction was to take out this high, right? Or take out this lower high. If we did something like this, if it was supposed to do something like this, right? So if it did something like this, it would be considered a reversal because we closed above this lower high right here, right? And a lot of people say the wicks matter. Some people say the wicks don't matter, but I think the wicks matter. I believe that a candle has to close above a wick. That's just my belief. That could be wrong, but I believe that in order for an actual structure shift, I feel like price has to close above the wick. But that's just me. You know what I'm saying? But for this to have been a reversal, price would have had to like excessively close over this lower high, and then it would have had to correct to go higher, right? So you guys can literally see how the market is literally just doing the same thing over and over and over again. The only time it might be like, you know what? I don't want to keep going higher. So you know what I'm gonna do? I'm gonna reverse right here. Right after it was going up for weeks on weeks, the market was like, you know what? I don't want to go higher anymore. I want to go down now. So that's what the impulse tells you. The impulse, which is this, tells you that the market doesn't want to go higher anymore. Why? Because we recently closed or took out the previous higher low. And now you can see price starting to create lower highs and lower lows, right? And I'm expecting this I'm calling it here on December 15th. I believe Euro NZD is going to get to 2.00009 possibly by the end of the month or maybe in the next week or so. That's just my opinion. And yeah, that's basically the video I have for you guys, man. I really want to know what you guys want me to make videos on. You know what I'm saying? I'm really trying to become a better teacher, a better teacher for you guys so I can expand on my own knowledge. Because I believe if you teach something long enough, you'll some way, somehow become better at it. You know what I'm saying? Your eyes, you'll start to train your brain to see certain things. Your eyes will start to notice patterns. You know what I'm saying? So tell me what you guys want to see down below. Be sure to give this video a like. You know, it would mean a lot to the channel. It would mean a lot to, new beginner traders out there that could potentially find the channel. So just make sure to like the video. Thank you guys for tuning in again, and I'll catch you guys in the next one. I'm out.